Welcome to another episode of Information Return Intelligence, the weekly podcast where we dive into all things 1099 related, Form 1042S related, W-9s, anything that falls under the heading of information reporting. And since this episode is airing on December 30th, it's our last episode of 2025. I thought it would be good to do a year in review, a recap of 2025 from an information return reporting standpoint, with a primary focus on accounts payable departments. So let's start in January and work our way through the year. In January, that's when we got two new regulations that give insights into digital transactions. So there was Regulation 1.861-18, which tells us that a digital transaction can be one of four things. It could be the transfer of a copyright right, giving you the right to reproduce or distribute something that you've received in a digital transaction. That would be a royalty, potentially reportable by you. It could be the simple transfer of a copyrighted article, which could be the sale of property, which usually wouldn't be reportable, or it could be a lease, which could be reportable. It could be the provision of services, which hold that thought because that's where the second regulation comes in. Or it could be the provision of know-how, which is basically trade secret type of information. I personally don't think that that regulation says anything too surprising or outside the box from our thinking on digital transactions. Where the complications really set in is the other regulation that was released, 1.861-19. Now, that was what we talked about in the last week's episode. So I'm not going to go deep into everything here because we've already done that. But that's the regulation that talks about cloud transactions, things like software as a service, which generally the Treasury Department says is the provision of services. So 1099 NEC, potentially. And if it's foreign source, like your software, let me rephrase that. If your software provider is a foreign company, then you have to determine, is that service payment for software as a service, is it U.S. source or is it foreign source? Because that's going to drive 1042S reporting. And we delved into that some last week, so we won't rehash all of that here, other than to just say it's an issue. And the sourcing piece, also in January, the Treasury Department gave us proposed regulations on sourcing, which says to use a three-factor formula to source between U.S. and foreign on cloud transactions, which is not very helpful to issuers of 1042S. And that was what was brought up to the Treasury Department in comments on these proposed regulations. That piece about the sourcing is proposed. It's not final and not really in effect. The other parts of it relating to digital transactions being one of four things and cloud transactions typically being a service, those are final and in effect for 2025. Also in January, there was an interesting private letter ruling from the IRS where there was this tribe, like a Native American tribe, that wanted to know if the tribe needed to send a 1099 to a powwow contest winner who received a cash prize of $600 or more. And the tribe tried to argue that we are not subject to Section 6041 reporting requirements. And the IRS said, yes, you are subject to Section 6041 reporting requirements. So the tribe tried to argue that they're not a person. See, Section 6041 says all persons engaged in a trade or business, but the term person has long been interpreted to be broad. Businesses, corporations, basically almost anyone or anything is a person for tax purposes. There's also an IRS revenue ruling from the mid-80s that specifically says Section 6041 applies to tribes. The tribe also tried to argue that they were not in a trade or business, which that gets into the weeds. I'll have to write an article about this. We're not going to get into it here because this is intended to be brief, but they tried to argue that they're not a trade or business, and the IRS said, no, we don't buy that either, because the definitions, you have trade or business for certain things like paying income tax and taking deductions and stuff. But Section 6041 regulations specifically say organizations not engaged for gain or profit also have a 1099 filing requirement. So that was just a letter ruling that I thought was interesting. I'll put that on the list to do an article about at some point down the road. Then if we move ahead to May, the big thing that I found in the month of May was something in writing where the IRS said for the first time in writing when the fire system was going to be shut down. And that date is proposed to be December of 2026, which will leave us with only IRS for filing of information returns after that time. Now, that's not 100% official, that December of 2026 date, but it is in writing, and the IRS has said it several times now, the rest of 2025, that they want to shut it down in December of 2026. Then we move forward to July. That's when we got the One Big Beautiful Bill, which did a lot of tax things, and there's two tax provisions tucked away in the Big Beautiful Bill that apply to information return reporting. And the biggest one is finally a change in the $600 threshold, which had been in place since 1954. And the Big Beautiful Bill changes that to $2,000 starting in 2026, but not 2025. So 2025, you're still using the $600 threshold. But next year, 2026, $2,000, and then that's indexed for inflation starting in 2027, so it'll go up a little bit every year. And then 1099K changes were also a part of the Big Beautiful Bill. And we should talk about 1099K in a separate podcast, and we will. But basically, the reporting thresholds for certain transactions subject to 1099K reporting are now rolled back to their original levels. So there had been legislation in 2021 that called for reducing the reporting threshold on 1099K. And now the Big Beautiful Bill has rolled all of that back to what it was before all of these changes. And then the Big Beautiful Bill also created a new tax deduction for some tips and overtime. While this is typically going to be an employee thing, it does have a 1099 implication, and we would get more information about that in November. So we'll get to that in just a little bit. The other thing that I came across in July was a private letter ruling where the IRS determined that Form 1042S rules apply to a non-resident alien who wins in sports gambling. Now, some types of gambling winnings are exempt from 1042S reporting, but sports gambling is not on that list, and so the winnings are reportable on 1042S, and there's mandatory withholding of 30% unless a tax treaty provision applies. In September, the IRS released a draft of Form W-9, and then they released another draft in December. That December draft keeps the main change that we're talking about here, which is, the biggest thing that most of us care about is that it is proposed in this draft that people marking the individual sole proprietor box on the W-9 would no longer be able to give an EIN on the W-9, only their social security number. And we talked about that in an earlier episode. As of the end of 2025, this W-9 is still in draft status. So as of the date that this is being posted, December 30th, 2025, keep using the W-9 that says March of 2024 in the upper left-hand corner. If you're listening to this on a later date in the future, after December 30th of 2025, go to the IRS website and pull up the W-9 and just use whatever version comes up when you click on the form. And then in November, the IRS released two pieces of guidance relating to that deduction for tips and overtime that was created in the Big Beautiful Bill. And the first piece of guidance, notice 2025-62, said employer reporting of qualified tips and overtime was encouraged but not required for 2025, and no reporting forms were being updated for 2025. Around that same time, we got draft versions of the 1099 NEC, 1099 Miscellaneous, and 1099K for 2026, which contain boxes for reporting of tips and overtime paid to contractors. And then the second piece of guidance was notice 2025-69, which provided guidance to employees trying to take a deduction for tips or overtime on their 2025 personal tax returns. And the main takeaway here, I think, comes from that second notice, which was geared toward employees, but there was some wording in that gives us a clue as to why 1099s have been updated. Like 1099 NEC, for example, is going to have boxes for tips and overtime, which is typically an employee concept, especially overtime, because the Big Beautiful Bill says qualifying overtime for purposes of this deduction, which needs separately reported on a reporting form, is overtime paid under Section 7 of the Fair Labor Standards Act. That's the federal labor law that says employees who are paid by the hour have to get time and a half when hours worked in a work week are more than 40. Fair Labor Standards Act covers employees, not contractors. So why are 1099s updated? Well, we talked about this in an earlier episode, but just to address it briefly here so we don't leave you hanging at the end of this episode, the Department of Labor oversees the Fair Labor Standards Act, and IRS oversees tax law. There are rare circumstances where a worker could be considered an employee under Department of Labor tests, which would thus make the employer subject to FLSA rules regarding that worker, such as needing to pay them overtime. But they could be a contractor under IRS tests, which would make that FLSA overtime reported on a 1099. Rare, but it could happen, and we talked about that in a prior episode. So that's your recap of 2025 for information return reporting. Join us again next week for another episode. Thanks so much, and we'll see you then.